Phil C here, owner of Star Prosper and professional trader from the Star Live Trading Room. Truly appreciate every single one of you sharing this time together, and I'm grateful for another day I get here with you. Huge favor, help me by hitting the like button there. And if you love my style of trading and what we do here, would mean the absolute world to me to hit the subscribe also. And I'll forever and always be here sharing this with you, and I trust that you find it valuable. With love from me to you, always. All right, trading. Today is a big one. And speaking of big, we've had a monster move on the Kiwi dollar from the Star Live trading session. And it played out for us. Now, I know for certain everyone is over the moon right now. Kiwi dollar, Aussie yen, with a total of 658 pips. That's over $1,300 right there. Everyone's kicking, especially for those on the 14-day free trial. Bit over the moon, and I'm happy for you. You deserve it. Those who aren't with us, link is below for that and more. Check it out and unlock everything I have and enjoy having my everything that made me consistently profitable while it's there. Why? Because next month it won't be. I'll be shifting models soon, then it won't be available. So I highly encourage, if you are wanting to level up your trading, to get involved below. And the price? Onto the STO, Star Trading Overview. I'll recap the trades early on, and then you and I will have a look at 3 potential trade opportunities for the coming trading week. And we are going straight to the charts now. Thank you for being here. I appreciate you always. Let's go. Kiwi dollar. Sometimes this happens. 6 bearish candles, 6 bearish days in a row, and hitting both targets here. Quite the big of the move. So got over 80 pips there on target 1, and about, measure that properly, right there, 100 and, this is 182, but I know that on this one I had 171 pips to add to the balance of this position there. Pretty good trade. So it's about 258 pips there, trading 2 contracts on $2 a pip. So $516 trade, or if you were trading a lot, that's about 5,000 right there. All relative on your position sizing with what you were trading. Okay? That's why people are kicking and why people are over the moon right now. Not too bad at all, especially those with me for the 14 days free. The live trading sessions allow me to do this in front of you every single day. We document the trades in front of you because proof of concept is key. And the only way to truly do that is with transparency. Right? So really good trade right there. We will take those pips and not dollar CAD, sorry. It is. Next, we are going to take a look here over on the, let's have to scroll like this. Next, I want to take a look over on the Aussie yen, just to recap this one too. So what's happened here? Remember, we followed the rules. Last week, with active trade management, we moved down into target 1 at about 400 pips here. I remember this. So that's another $800 in your pocket with this one. It's another good score. Patterns putting in some work lately. Patterns pay. Said that last week. So they don't always win though. But when they do, our risk reward profile, as you can see right here, is so good that over time, we average out with more gains than loss. That's our edge. It's a good deal. It's a good trade, going good. Now, let's get to the trade opportunities that I want to pay attention to for today. It is Euro Yen, I believe. So there is a pattern trade at market on this one here. Dun, dun, dun. All right, so what are we doing right now? Well, we're heading towards the upside. We've been following it right down here. And price action, stepping towards the upside. Now, on the daily time frame, you can see that we put in a double top right up here. And that is not a good color for that. Make that easier to see. Right there. Okay. So we put in a double top right there. Price action came down like this. Retest these lows, and now we've pushed up right back up into this double top. So this high right here. Price action now is retesting our highs. So what we can do is look for a bearish opportunity. I'm looking for a sell opportunity right up at this high. In order to do so, we're going to jump down on a lower time frame. So this is the 4 hour right here. Oh, sorry. This is the 4 hour right here. And what we are going to identify is a bearish bat opportunity. So we have our swing high right here down to our swing low. I want to grab the Fibonacci tool. We use Fibonacci ratios when we're trading patterns, okay? So we have Fibonacci swing high all the way down into swing low. For those of you following along with me, we have price action coming up, hitting the 382. So we have a B point right there. Condition 1 is met because price action came all the way up into our 382 right there. Condition 1. So what are we looking for with condition 2? You ought to know this by now. We did it last week. Fibonacci ratio yet again from swing low to swing high. Okay. Swing low up in a swing high. And now you can see price action came all the way down into the 382. So we have a 382 B point and a 382 C point. So that's 2 conditions met. Now, what are we looking for? Well, if price action moves all the way up into our D point completion, then we're looking for a sell opportunity. In order to do that, we take our Fibonacci retracement tool yet again, and we go from our impulse leg, right? So here we go, swing high all the way down into swing low right there. We're looking for that CD completion. So we get a move all the way up into a D point completion right there. And as you can see with price action, we are sitting at just above the 886. So remember, anywhere between the anywhere between the 886 all the way up into our highs looking left is a valid sell opportunity. So just like the opportunity that we had on the pound dollar last week, or was it the week before? We had an opportunity on the pound dollar and we sold when the market opened, right? Make that red. We sold when the market opened and then it immediately dropped right into target 1. So that was about, I remember, that was about 75 pips on that trade on the pound dollar. So this is, it's a similar opportunity here. We have price action right up into our potential reversal zone. Excuse me. So now this is a valid sell opportunity. On market open, we can sell, right? We have X to A to B, B to C right there, and C to D right up here into the 886. So where are stops and targets? Well, we already know that stops are above our X point looking left. Okay. So we put our stops right there. We grab our dealer thing. We drop it in there. So now we have our stops above our X point looking left. So this should be, ought to be, and will be, I know, a good risk to reward profile on this. Entries right there. Stops above the swing high. And then targets are a Fibonacci retracement from full leg of the move. Swing low all the way up into swing high. So here at the 382 is our target one. Really nice risk to reward. So this is over a 2-to-1. We duplicate this, okay? Because we're always going for two targets. We duplicate this and then we move all the way down into the 618 right there. And target 2 is a 4-to-1 on this trade right here. So it's, it's an insane risk to reward profile. Why? Because these are 50% accurate. Half right on these trades, on the pattern trades. So every single time that you execute this trade, you have a 50% chance of being right. So if we are half right, star traders, if we're half right and we have a risk to reward profile like this, you can see that over time, you have an edge. Now, all you need to do is show up every single day and trade it. And trust the plan. So this is why trading can be incredibly powerful. Again, you don't need the 80-90% win ratios. You just need 50% half right on this kind of risk to reward profile. And you'll do incredibly well. Absolutely. So patterns pay over time. All right. So this is our opportunity here that we want to pay attention to on the euro yen. So this is 4-hour time frame. A bat pattern opportunity. It's a sell at market open. And now I want to take a look at two potential trades before we wrap this up right here over on the euro yen. So euro yen, let's jump out to the daily time frame. Like this. So right here, we had our potential Gartley pattern. I was looking at this last week, right? So this is our potential trade opportunity if price action can move all the way down into our CD completion, okay? So if we do, there is a buy opportunity. Now, but there is another one here as well. So let's get rid of that. And then actually I want to drop down into the 4-hour again. Okay, so you can see right in front of you, right now, we have a W formation. Okay, right now you can see that. This is what we're going to measure. Don't get thrown off by the other pattern. I'm going to leave that drawing there. That's fine. So here we've got our W formation. Here's another potential trade opportunity. We go through the same thing. So swing high all the way down into swing low. Another potential Gartley pattern. As you can see, price action coming all the way up into our 618 right here. We have a 618 B point retracement. Condition 1's met. We're on Gartley pattern alert now. And then we have another move all the way back down, don't we? Now we touch this low, okay? We retest this low, but price action didn't push beyond this leg right here. So that means that we have condition 2 met. Price action came all the way back down into retesting this low. So we need a minimum of a 618. So we had the B point 618. So if I take a Fibonacci retracement, swing low to swing high, you can see that we come all the way down and we hit the 618 right there. So now we have a valid C leg. Yes, 618 is hit and 618 is hit again. Condition 3 is a CD completion. A CD completion all the way up into a Fibonacci extension from our A to B leg, right? So let's grab a Fibonacci extension tool and we'll go from swing low, swing high, back down in. And what we're looking for is the 127 Fibonacci extension right here. So if then syntax, if price action moves up into the 127 Fibonacci extension, then we have condition 3. That completes the Gartley pattern right there. Triangle tool, let's draw it in so it's easy to see. X to A to B, B to C right there, and C to D right here. So we have a potential bullish Gartley right down here. So if price action can move all the way down into this D point right here, then we're looking for a buy opportunity, right? We have our entry stops and targets already. I just rewind a little bit in the video before I cleaned it up there to see it again. Or if price action moves towards the upside, giving us a CD completion here. That's another Gartley pattern right there. Then we would sell, okay? At the 127, we would sell into target 1 and target 2. So let's do that right now too. Because we have a really good risk to reward profile on this trade here. It doesn't matter where price action goes from here now, does it? Right? We're in a very good position here because now we're just waiting for price action to come to us. We're not forcing anything out of the markets here. We're waiting for price action to come to us, right? If price action can move all the way down, we're going to buy because it meets our rules. If price action moves all the way up to the upside, then we're going to sell because it meets our rules, right? So good risk to reward profile on the bearish move here. So this box right here is our potential reversal zone. Let's grab our dealer. I'm going to drop it in right here. Like this. So our stops are already at a good level. Stops are above the X point looking left, okay, above this swing high right here. We got a good stop placement there. We have our entry, we have our stop. And you already know the targets now. Fibonacci retracement tool from swing low all the way up into swing high right there. So CD completion, we sell right here at 89 350s. And targets will be at the traditional pattern targets. So 382 will be target 1. You can see right there, 1.5, right? Let's duplicate this and move it over like so, and then drag that down into the 618. Yes, we have target 1 at 382 and target 2 at the 618. So over 1.5 risk to reward profile on target 1, and then over 2.5 on target 2. Again, really good risk to reward profile being half right. I just want to keep, going, following on from last week's video. If this is really, really important to understand. And I say this and I share this with you again to inspire you in your trading and what you are doing, because I know with absolute certainty most of you can be half right. All it takes now is taking that strategy that you are half right on, that you are 50% accurate on, and then going out and testing it on the pairs and the time frames that you are active in the markets. If you've been following my shorts, that's also what I've been talking about as well. Active means when you are sitting in front of the charts, when you are actively trading your trading session, whether it be Tokyo, whether it be London market open, whether it be the New York market open. When are you active in front of the charts? And take the strategy that you're half right on and go test it during the times that you're active in the markets. And then if you have this kind of risk to reward profile and the data indicates to you that you're half right and you have this risk to reward profile when you are active in the markets, then number 3 is you continue trading that in a live account and you'll do incredibly well. You'll be profitable. And if you do that with discipline every single day, then that's how close you are to a consistently profitable trader. Again, so I share this to inspire you with your trading, right? So we have 3 potential trade opportunities. We had the one on the Euro Yen. So we had a pattern trade on Euro Yen, which is at market, right? And then we have this buying opportunity right here. If price action can head towards the downside, then we buy it up. Or if price action moves towards the upside, we are going to sell it right there. So we've got bullish, potential bullish Gartley pattern here and potential bearish Gartley pattern there, right? And that's it, actually. That's what we got. So that will do it for the STO for today. And thank you for being a part of the STAR team and what we are doing here. And to the big movers that we were involved in, that helped all of us. So not too bad, over about $1,300 pulled out of the markets. And again, on the free trial, that's insane. That's bonkers. Really good. Take advantage of it while it's there. Replays are always on demand, and you have access to all my material too. So be sure to get stuck into it while watching the new potential trade opportunities. Link below for you. Until next time, beautiful star traders. Be safe, enjoy life, and I'll talk to you soon. All right. Thank you so much.